For more exclusive content from CNBC Crypto Trader, hit the subscribe button now.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.
Coverage of a Satoshi Roundtable in Mexico is brought to you in part by Tokensoft. This week's edition of Crypto Trader comes to you from an undisclosed location here on the coast of Mexico. We're attending an unconference hosting some of the biggest names in crypto. And whereas TV coverage of this conference is strictly prohibited, we're going to be talking to some of the biggest headliners here in crypto. But first, let's take a look at this week's news headlines. Binance accepts credit cards for crypto purchases. Van Eck refiles for a Bitcoin ETF. $190 million lawsuit against Quadriga X. Casper Labs announces its launch, but is Vlad leaving Ethereum? And a big bull run is happening in crypto, this time in securities tokens. Those are the headlines. I'm Crypto Man Run, and you're watching Crypto Trader on the only channel that's all in on crypto, and that is CNBC. Binance announced this week that it would start accepting credit cards for crypto purchases on its platform. The move is seen as another big step in crypto adoption, and tonight I've got the founder of the company whose technology is powering this innovation. Nimrod, apparently your company is responsible for the magic behind the Binance announcement. Tell us more about the announcement.
So starting from, I think, Thursday, you're now able to purchase crypto using your regular worldwide credit or debit card on the Binance platform as well.
So Nimrod, does this mean that anyone who has a credit card can now buy crypto on Binance?
Pretty much, yes. There are certain limitations, meaning that there are certain countries which we can't serve, certain states in the US which we can't serve for now. We're constantly expanding the service. There are limits on the amounts that you can buy. Maximum right now is $10,000 a day, $50,000 a month. But yeah, basically we're thriving constantly to make it more accessible to everyone. So yeah.
Nimrod, explain to me what happens in the case of a chargeback where people buy crypto on their credit card and then go back to the bank and reverse the transaction in the form of a chargeback.
So I think the biggest issue with the credit cards and the crypto ecosystem in general, and the reason we started this business, and the fact that credit card for this world were were announced as the holy grail, is the fact that you are able to commit a chargeback on a transaction, meaning that had I stolen your credit card and used it to buy crypto, and then you found out, you can still get the protection of the credit card and receive the funds back. So what Simplex does essentially is collect some 700 attributes per transaction in real time, understand if this transaction is fraudulent or not, block the fraudulent one, and allow only the ones that won't end up in a chargeback, hence protecting the merchant. So the exchange, when they're fulfilling the crypto transaction, are always safe. Otherwise, it would have been suicide on their part.
So am I right in saying that Simplex's business model is to take bets on the risk and effectively protect the merchants against the risk of chargeback?
Absolutely, though it's not a bet. It's a very well-educated guess. We are doing everything we can in order to mitigate that risk, meaning that about 100 people of our staff are working constantly on that system to make it constantly better, both by blocking all the bad guys, but also allowing all of the good guys to pass.
Nimrod, it sounds like the kind of model that you can use in any kind of industry. Are you guys focused on crypto, or are you applying this model to other industries?
Today, it's still very much our core business. Having said that, it's a very true distinction. The fact that basically crypto is just a very high-risk product in e-commerce, meaning that if we know, and obviously we do, know how to protect a transaction in the crypto ecosystem, being the highest fraud risk ecosystem, we're able to expand our services into other verticals which are also considered high fraud risk, like marketplaces, for example.
Is there any additional cost to the user? If a user spends $10,000, does he get $10,000 worth of crypto?
No, far from it. You have to pay the credit card processing fees, and the fees are based on the volume that the merchant is driving through us, and whatever they want to add or subtract from that. But yeah, the credit card companies are always getting paid. The banks on the way are always getting paid. I think, at the end game that we're all waiting for, where crypto is massively adopted, there wouldn't be a need for such a service. But, in the next decade or two, we'll still need on-ramps and off-ramps.
Nimrod, so the big announcement, of course, was that you guys made the service available on Binance. But are there other vendors using the service?
So we're working with about 100 companies right now. Not all of them onboarded, but we have quite a few websites, quite a few wallets, and we're speaking with pretty much everyone in the industry. I'd say that almost anywhere except Coinbase, where you can buy today with a credit card, it's most likely through us. Again, the fact that we're providing it risk-free for the exchange or the broker or the wallet is massive for them. If they don't use us, they're paying for their own chargebacks.
What does this mean for crypto adoption?
I think it's a massive thing. I think that the fact that people are able to buy easily, immediately from anywhere at any time is huge. And I think that the next product to be released very soon is the flip side, meaning sell crypto and take money to your credit or debit card. I think that one of the biggest issues for user is accessibility both in and out. And the fact that we're providing that will definitely push mass adoption.
After the break, we'll be looking at the refiling of the VanEck ETF.
Christian, buddy, come sit over here. Now, the advertising offers have been flooding in. Look at the pile of offers I've got here for you. Look, let's just take a pic. Picture this. You're hiking through the Rocky Mountains, okay? And you're carrying gorgeous rosewood designer door on your back. And you look into the camera, and then you say, oh. No, yeah, you're right. It's terrible idea. For the next one, you'll be carrying a refrigerator on your back, environmentally friendly refrigerator, and then your line is, well, actually, it's just one word. We'll put that one on ice, okay? Yeah. This is a hot dog chain. You're carrying this huge hot dog on your...
Enough! I've had it. No more carrying, no more saying that word ever again. I'm a serious actor. I have depth. Why can't you get me something with like an office with a tie, for example?
Action! Bitcoin is crashing. We have to sell
Bitcoin is a bubble! Hodl. 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 I have to find a new agent.
One company that's doing something very interesting in the spirit is a company called Abra. Bill, tell us about what you guys are doing.
Sure. So Abra today is a cryptocurrency wallet that allows consumers to buy, store, exchange between 50 fiat currencies and 30 cryptocurrencies. So you can buy Bitcoin, Ether, XRP, Ripple, Monero, Zcash, and you can exchange between them in the app.
So when you say it's a wallet, is it an exchange or a wallet?
Well, it basically combines them into really what looks like an investment app. Right, so it's a wallet in the sense that you're storing your keys for those that are kind of crypto initiated, but it's an exchange insofar that you're able to trade between the assets directly from the app. And there's some really cool tech behind the scenes that makes that happen.
And you can store any kind of currency. You can store XRP, you can store Bitcoin, you can store Ethereum.
Dollars, euros, pesos, yen, and literally exchange between all 80 currencies, crypto and fiat. And today we're announcing that we've extended the app to be able to include traditional stocks, commodities, exchange traded funds, and exchange those between not only each other, but the traditional currencies and the cryptocurrencies. So you can trade your Bitcoin for Apple shares, your Apple shares for, Spider ETFs, et cetera, et cetera.
Okay, now this is all very confusing. So you've got multiple coins living on multiple chains, all living in one wallet.
Yeah.
And now you're combining this with currencies, which are normal currencies, and now equities.
So think of it as an investment app. That's what our users use Abra for. I'm investing in XRP. I'm now able to invest in Apple shares, spiders. I can even invest in euros if I'm an American and want to get exposure to the euro.
Okay, so let's say that I use your app. Can I use Bitcoin to buy Apple shares?
Absolutely. So this is part of the breakthrough of what we're announcing. So in 155 countries, basically anywhere in the world, if you have Bitcoin, you can put it into Abra and use that Bitcoin to buy any stock on the Nasdaq.
So you can now buy stocks using Bitcoin. Who holds the stocks?
So actually, you do as a consumer. It uses a model that's similar to CFDs, which are common and prevalent in Europe, but they're based on Bitcoin. So you're actually getting an investment contract that pays out if the price of Apple shares go up, and you pay in if the price of Apple shares go down.
So you're not actually holding the underlying equity.
Correct. These contracts are 100% based in cryptocurrency, Bitcoin. So this is one of the best uses of Bitcoin we've ever seen, because every single contract uses Bitcoin in the background to fund the contract. Even if you fund your Abra app in dollars or euros, it converts that to Bitcoin to use it in the background to fund the contract.
So is there any other platform where you can use cryptocurrencies to buy common equities?
No, I believe Abra is the first and only company to even figure out legally how to do this all over the world. It's very complex behind the scenes, but when you use the Abra app, just download it from the App Store, the iOS or Google Play Store, it's super easy. It looks just like any other mobile money app, but it also allows you to hold stocks and ETFs and commodities and whatnot.
Okay, now the critics must be looking at this and saying, what is the benefit of using Bitcoin to buy stocks versus using US dollars to buy the stocks?
Great question. So it's three things in my opinion. The first is access. We are the first company to figure out how to take, like Robinhood in the US or Revolut in the UK, they work in a silo in one country. Abra has figured out how to use Bitcoin to make this legal everywhere. Okay, so you can take Bitcoin in South Africa, pump it into the Abra app, or in Ghana, pump it into the Abra app, and you can legally buy that Apple stock everywhere.
Okay, now can I only buy the Apple stock when the Nasdaq is open?
No, yes, so you can place the order 24 hours a day. If you place the order outside of market hours, the order will be queued. So you can place the order at noon in Ghana time, and if the market's closed, which it would be, the order will simply be filled the moment the Nasdaq opens, and you'll get a push message to the app that you now own investment in Apple shares.
Bill, when does this go live?
So this goes live in the next few weeks. People can start signing up to get in line to get access to these stocks and commodities and exchange traded funds today by downloading the Abra app directly from the App Store and signing up.
Again, the narrative is all about building and building for adoption, mass consumer adoption. And right here we have a great and interesting use case of how we can now use cryptocurrencies and Bitcoin to buy common equities anywhere in the world. So after 3 days at the Unconference, I've managed to catch up with Saifedean Ammous, who wrote the book called The Bitcoin Standard. Saifedean, welcome back to Crypto Trader.
Thank you for having me, Ran.
3 days of Unconference and a lot of talk about adoption. Are we getting enough more Bitcoin adoption?
Overall, if you think about 10 years, the value of Bitcoin and the amount of adoption that it has achieved in only 10 years as a technology, I think it's fair to say it has been a success overall.
How many
It
users?
disappoints people who would have expected more, but I think that's more a reflection of their unrealistic expectations rather than the reality of the technology, which has been progressing pretty fine.
How many users do you think Bitcoin has in the first 10 years of its existence?
I've read different estimates the best I could come up with is that it's somewhere between 10 and 100 million people. Yeah. Probably somewhere around 20, 30, 50, maybe something like that. This is my estimate.
And do you think that now we're at a faster rate of Bitcoin adoption, or do you think that the rate has slowed down because of the bear market?
Yeah, obviously there's a cyclical nature to it, which I think is reflected in various metrics. You can see it in price, but also in the number of transactions and in the transaction fees. So definitely now is a period of decline, but Bitcoin has had many of these before. The only way to understand Bitcoin is that it is an alternative to central banks. That's what it does functionally. And essentially it's the only working alternative to central banks. So as long as people governments impose a physical monopoly on central banking and on using their banking systems, and that's essentially what drives demand for them. But that allows them to, in many cases, in many places in the world, abuse that monopoly, and that offers people an incentive to move to alternatives, and Bitcoin is one of the most effective alternatives, the only new technological alternative that is easy to transport around the world. As long as banking continues to be a political issue, and as long as countries continue to face political sanctions, you would expect the demand for Bitcoin to continue. If you witness improvements in those things, fewer episodes of hyperinflation and high inflation around the world, you would expect the demand for Bitcoin would likely subside and decline.
But that's highly unlikely. Now, before I let you go, there was a big discussion here around what happens after 21 million coins and the marketing, or the mining incentive is no longer around. Some people claiming that people wouldn't want to pay transaction fees after that, and effectively the network would fall over. What's your counter argument?
I mean, I think, if people didn't want to pay transaction fees, it's an entirely possible scenario, but it's no different than the scenario which exists today, which is that people choose to not hold Bitcoin, and then the price of Bitcoin collapses to the point where mining stops being profitable and the network becomes cheap to attack. So whether that's going to kill Bitcoin or not, is an empirical question. Bitcoin has survived without one of these attacks for 10 years. It's worth saying, as we've seen with many other blockchains, that one of these 51% attacks, as they're called, is not exactly fatal, because we've seen it happen to some coins that have still survived it. So I think the threat can be slightly exaggerated in a sense. The key point that people miss in this discussion is that the demand for Bitcoin currently is being financing the inflation. So people who are holding Bitcoin are essentially paying for the mining.
It's a marketing subsidy. The mining reward is a marketing subsidy.
Exactly. Through the mining subsidy, devaluing their own currencies. So it's a form of inflation that is now at around 4%. The money supply is increasing at around 4% per year. And that's essentially, of course, bringing down the value of the existing coins, because it's increasing the supply. So if demand for Bitcoin is still objectively on the market larger than that subsidy, than that inflation rate, than that increase in the supply, then the price of Bitcoin continues to rise. The price of Bitcoin remains high enough to continue to secure the network. If demand drops, then the network is no longer secure. However, we've seen transaction fees rise before, around 1 year ago during the height of the bubble. And they rose because, if you want to buy Bitcoin, you will pay the price for it. And that was the way in which it was paid in that period. However, that led to the development of scaling solutions, which increased the capacity.
And so you think that transaction fees will be there long after the 21 million coins are mined?
Yeah, I mean, ultimately, I think there's no difference in that. If there is demand for Bitcoin, it will continue to operate, whether it's through inflation and mining subsidy, through new coins, or through transaction fees. If there's no demand, it would fail in both cases.
The long-running saga around the Bitcoin ETF continues. This week, VanEck announced that they had once again filed an application for a Bitcoin ETF with the SEC. Joining me to discuss the refiling is Gabor Gorbach from New York City. Gabor, your CEO announced last week on CNBC that you guys were withdrawing your application for an ETF because of the government shutdown. And then 2 days later, Trump ended the government shutdown. Do you think that you were premature to withdraw the ETF?
Well, Rand, no. First of all, thanks for having me back. And second, we had no idea how long the government shutdown would last. Like, we're something like 34, 35 days in, and we withdrew our application because we didn't want to slip through the cracks, and in a potentially few months long government shutdown. So I think we did the right thing.
Gabor, was there still a lot of work to be done by you and the SEC around the previous ETF?
Well, yes. So we were fairly clear that there is work to be done related to the Bitcoin ETF, and the three areas are pricing, custody, and market manipulation related concerns. And we believe that we have reasonably good answers to all of those questions, but it takes time to iterate it with them. And when there's no one in the office and no one picks up the calls, then you can't solve those questions. So certainly we didn't want to get an answer that might not be the answer what we wanted for the ETF, because everyone's out of the office.
So this week you refiled the proposal. Is it the same proposal, or have you guys made changes to the ETF proposal?
So Ren, It is the SIBO has filed a rule change, so basically an application for the VanEck trust, and there are some changes on it. We have incorporated changes to the proposal based on regulatory feedback and based on feedback from market participants that we got, and some of those changes are related to basically analogous markets, so like the gold and commodity markets and some of the shipping markets, freight shipping markets out there, and so we have presented some scenarios where the SEC approved an ETF which had less transparency to the market, where pricing in those markets were not as built out as Bitcoin, and the custody of the underlying assets were also not as built out. So that's we added some of those precedents, and we have made an effort last year actually to publish some of our correspondence with the regulators and meetings that we had to let the market know what we learned. And again, those things are related to custody pricing and market manipulation, and we just added those. Actually, something like 30 extra pages are added. It's hardcore analysis on why Bitcoin is ready for an ETF.
So do you think that in a way this could have been a blessing, giving you an opportunity to refine your proposal?
Yes, I believe this proposal is much stronger than sort of the previous one. We just formally incorporated the answers. We spent over a year and a half, 2 years educating the SEC and other regulators on this pricing, custody, and market manipulation concerns and the appropriate answers to that. But now it's formally part of the proposal, so it might help. I don't know if the shutdown was a blessing or not. Because we said that timeline apart, we're committed to bringing a Bitcoin ETF to market, and this 240-day periods is sort of people look at it as a formal and very important timeline, but I just look at it as something that is imposed by law. I think the most important thing is just solve the problems and get a Bitcoin ETF to market. Because if you think about it, I do not believe that Bitcoin can be accepted as a store of value or like a mean of transfer long term if the financial system doesn't accept it. So Bitcoin does need an ETF to get the sort of like the stamp of approval from institutional investors. If you look at the markets, for instance, there's the Quadriga hack and all these hacks and exchange runs and things like that, and so institutional investors do not feel comfortable engaging if there is not better vehicles and assurances in the market, and today there's just not. So we are trying to kind of bring Bitcoin into the financial system a little bit better than most other people did.
So Gabor, does this mean that we have to wait another 240 days before we get an answer, or is there a chance that it's going to be shorter?
So the answer is, first of all, maybe let me walk you through and your audience through how this the approval process works, and it will, I think it will be helpful. But first, an exchange files for a rule change or an application. Then a few days later, the SEC accepts that application that it submitted, and then about 3 to 8 days roughly later, it gets published into a Federal Register. And from the time the application gets published to the Federal Register, there's 240 days to make a decision. Now, the SEC, should they decide to approve a proposal or reject it, they can do it on day 1, but they can do it on day 240. So that's why I said that these timelines are sort of kind of important, but not really the most important thing. So I think, again, the most important thing is to address the problems that they have flagged, and I think we've done that. So there's a chance again for day 1 or day 240. We'll keep you guys updated. Ran, you have a very active Twitter account, and if folks follow you or follow me on Twitter, then you'll definitely get the latest on related to the application. And what I would say also, and this is important, if you have the time, read the application. It's a public document, and I can only say what's in the document. But if you read it for yourself, I think you'll see that there's a lot of work that has been done.
I caught up with Brian Kelly about his thoughts around the Bitcoin ETF. Let's take a listen to what he had to say. So Brian, when I spoke to you before Van Eck withdrew its ETF, you said to me, we're not going to get an ETF until at least 2020.
Yes.
And then they withdrew the ETF, and now they've refiled, and the SEC has 240 working days, which means that 2020 is the earliest we could get an ETF. But what was your thinking?
No, I guess I was right, but it wasn't because I thought they were going to withdraw. No, so my thoughts is the SEC has been fairly clear about what they expect, and they expect that there is a global exchange that is regulated by them, or at least there is an exchange that's regulated by the SEC or one of the regulatory agencies in the US, and that the majority of the trading or some portion of the trading that is meaningful trades on that exchange. So they have the ability to view through that. We don't have the exchange infrastructure for that yet.
So when you look at a Coinbase, I mean, Coinbase is pretty much regulated, and it's probably the biggest exchange in the USA. Mm-hmm. Is that not good enough for them?
Apparently not. Otherwise, they would have approved it at this point in time. I think they're thinking something more like maybe what ICE does with Bakkt, right? One of the kind of the bigger exchanges. Maybe Nadaq comes in. But to date, nobody of that kind of level has traded spot Bitcoin yet.
Do we need an ETF?
I do. I think so. I think the investing public should have the ability to invest in Bitcoin. Right? I mean, why is the only way to get into Bitcoin is either to buy it via Coinbase or hold your own private keys, or to come to somebody like me and have to be an accredited investor? You should be able to buy Bitcoin. It's a legitimate asset. You should be able to put it as part of your portfolio. It's completely non-correlated to everything else. So why shouldn't investors have that option?
What do we need to do other than having one big regulated US exchange? What else does the industry need to do to convince the SEC that it's a good thing to have an ETF, or to allow us to have an ETF?
I think probably the best thing, and Hester Pierce, I guess, has put it best, is that the understanding that the retail investor should have the opportunity to invest in this asset, right?
So you think that 2020 is the soonest we're going to get an ETF, but it's possible that we will get one in 2020?
I think it's possible in 2020. I think that's the soonest. But I do have a lot of confidence that sometime in 2020 we have an ETF.
Okay, now we've been here for 3 days in this conference or unconference, and they were clear that no TV cameras could go inside the conference. So looking at you to give us a little summary of what the biggest takeaways were from this conference.
So my biggest takeaway is, under the surface, besides the fact that we've had a bear market in price, under the surface, the building and the enthusiasm and the passion is still there, right? There is so much going on. My brain has exploded, right? I'm going to need a vacation after these 3 days just to kind of process everything that's going on. But people are still full steam ahead. Nobody has lost any enthusiasm for what's going on here, for this disruptive type of technology.
The right kind of people are moving full steam ahead, whereas probably last year it was the wrong kind of people moving in the wrong direction. I found that the people that were here were the real builders. Guys
Absolutely.
building institutional infrastructure, securities token infrastructure. Patrick Byrne was here. The guys from Bitfinex were here. Fidelity was here.
Right.
Yeah.
And it's, you're really starting to see the maturation of the industry. And a lot of these people have been in it for a long time. And, they've been building really great products for a long time. And thankfully now that kind of cream is rising to the top.
A new protocol called Casper Labs has sent rumors in the industry that Vlad Zamfir may be leaving Ethereum. After the block broke the story, both Vlad and Vitalik denied this vehemently. So I thought I'd catch up with one of the founders to find out what the real story was. So Scott, is Vlad leaving Ethereum?
No, absolutely not. It was a completely unfounded rumor. Vlad doesn't work for Ethereum. Vlad is a researcher for the Ethereum Foundation.
Okay, so Vlad's not leaving Ethereum. Is he taking a step back from Ethereum to start spending more time on this new protocol?
Vlad is not taking a step back or forward. I've spoken to Vlad. Vlad is the lead researcher for CBC Casper. It is a scaling solution built for Ethereum. There are a number of scaling solutions being built and proposed for Ethereum.
Okay, so let's talk about this. So Ethereum was having scaling problems. They tasked Vlad with doing research as to how to scale it, and Vlad publishes a paper around Casper. What happens then?
So This is where, this is where we kind of began to get enthused and excited about this process. We learned about the CBC Casper protocol, and we began to believe that there was an opportunity for a new blockchain based on this Casper protocol, regardless of whether Ethereum decides to use it or not use it. We're huge believers in Vlad's vision of CBC Casper.
So what is Casper Labs? What is this new protocol?
So Casper Labs is a research and development firm that is building a public blockchain based on Casper protocol.
And what kind of public blockchain is this? Is this a proof of work, proof of stake?
It is a pure, decentralized proof of stake blockchain.
Okay, and are you going to then use the research done by Vlad to be able to scale this chain?
We believe our team has gone through the process and the steps for going on 16 months, and we believe that this is the most highly advanced blockchain ever proposed.
Tell us why.
There's two major problems with proof of stake blockchains, but the main one is, first, they've yet to scale. The ones that have scaled, they've come up with a way of scaling that really removes decentralization. And so mainly the way that the way that they've been able to scale these protocols is by coming up with some type of centralization. We believe that this is the best solution ever proposed for a fully decentralized and yet scalable blockchain.
Okay, now, so let's talk about Ethereum. Why doesn't Ethereum just implement Casper?
I absolutely believe that Ethereum will implement some version of Casper at some point in the future. I don't know when it will occur, but there will be, there's certainly, I believe, going to be multiple versions of Ethereum. So it really depends on which Ethereum you're referring to. There is Ethereum Classic. There is a current Ethereum that is a mined proof of work token, and there will soon be a third Ethereum. I assume that will still be called Ethereum ETH. I don't know, but there will certainly be 3 Ethereum tokens to choose from.
And you believe that your chain, the Casper chain, your Casper Labs chain, will be faster than the Ethereum chain?
I don't believe that it'll be faster, slower, or indifferent. I believe that we will have a different solution available for developers to build on, something based on Vlad Zamfir's version of Casper. We are building that.
Now, Scott, officially, what's Vlad's title in the Casper Lab story?
Vlad is not titled in the Casper Lab story. We are in discussions with Vlad and his team today.
There's a crypto bull market happening right now. And if you can't see it, you're probably looking in the wrong place. With the launch of the T0 platform last week, it seems that securities tokens are taking center stage. Today, talking about securities tokens, I've got Trevor Kaverko from Polymath, and I've got Sean Nasiri from Tokensoft. Now, are we talking about the securities revolution happening soon?
So I wouldn't call it a revolution. It's definitely an evolution. So there's nothing revolutionary really happening within securities yet. We're still operating within the same framework, the same laws of private placements as of right now. This is just the next evolution in taking existing private securities and Reg D offerings, bringing them onto blockchain and leveraging smart contracts to make them smarter and more trackable, traceable, and liquidity is what a lot of people tend to get hung up on.
Trevor, is this a revolution or an evolution?
I would tend to agree. I think there's a misconception, that the regulators are against security tokens or that this is some new disruptive force, but it's really just a new format. But we still think there's very important and disruptive implications for the consumer, for the investor. We're driving down the cost of transactions. We're making it easier for entrepreneurs to get liquidity on traditionally illiquid assets.
So what needs to happen this year? Sean, I'm going to look at you first. Okay. What needs to happen in 2019?
In 2019, what we need to see is adoption by mainstream institutional investors.
But how?
So there's a couple ways for institutions to get involved. One is, I think, making it easier for them to onboard. Right now, we have to go through, there's KYC AML, there's investor accreditation, which for many people, by bringing it online, streamlines it and makes it easier, especially for foreign investors, which is really a major upside to having these digital securities. But for traditional investors who've been writing checks for years, for them to go online and type in all this information and upload documents is a pretty big hurdle.
Trevor, what are you looking for this year?
I want to see more investor demand. That's obviously the big, gorilla in the room right now, is how do we get incentivized investors to actually put capital into this space. I also want to see more high quality issuers come to the space. At Polymath, that's what we kind of focus on, is how can we bring top quality supply with top tier issuers, marquee entrepreneurs that are issuing a token, whether that's an equity token, whether that's a limited partner share in a fund that's getting tokenized.
Okay, now what is coming onto the market? Are we getting any serious players coming into the security token market? Or are we seeing small venture companies who can't afford to be listed anywhere else, who don't know how to raise capital, going, oh, well, there's this new industry called securities tokens, let's go and try and raise money there?
I think that's okay. Look, this is a new fledgling industry. We're not necessarily going to get the Apples of the world knocking on our door. A lot of projects that originally came to us are companies struggling to raise their Series B, and this is a new option for them, and I think that's perfectly okay. That's a huge market.
Sean, walk me through this. Yeah. I'm a company that wants to go and raise capital. I now decide I'm going to do a security token issue, and I go to the market and I look for investors.
So I think the way you phrase it is that it's not a new instrument. It's the same private placement Reg D offering that most investors are used to seeing from startups or private companies. So, the example I like to give is every quarter there's people from Uber, Airbnb, Hotel Tonight, Palantir that are trying to sell their Series B, Series C shares that they bought, and the valuation has gone up 50, 100x, but they're still sitting there holding on to these paper certificates that they don't even get to physically hold. And they're like, what am I supposed to do now? How do I sell it? I'm cash poor, I'm stock rich in a non-liquid market. So when they try to sell that in a traditional way, you get this illiquidity premium where they're selling it for under the market value. Whereas with this industry, you have that liquidity, but another advantage is you also have transparency, you have compliance, which is really important for the SEC. All that's put on a distributed ledger. You have cap table management, which gets really important for doing follow-on investment rounds. And the benefits can go on and on, because you could also start securitizing different lines of business and different revenue streams that aren't your traditional private equity style rounds or fundraising rounds.
And the reason you can do that is because tokens are programmable. These aren't just legacy pieces of paper called share certificates that sit in a filing cabinet. They're actually pieces of code that live in the cloud that you can command to do things. And what this means is you can automate certain aspects of your business, like dividend payments, proxy voting. You can have milestone-based funding requirements right in the token itself. Lots of exciting ways.
It becomes a trustless economy of securities are now becoming trustless.
Exactly. Some other things I look at is I call it atomization of investment products, or granularization. So what I mean by that is, right now, if you want to invest in Apple, you got to invest in the whole thing. But with security tokens, you can theoretically go long on the iPhone and short on the Apple Watch.
How?
Security tokens, it's this global settlement layer, and natively, by default, these securities speak to each other. And it unlocks trillions of dollars of new investor capital and new investment products for global citizens.
So we've got a whole lot of entrepreneurs watching this, and they're thinking to themselves, I like what I'm hearing, but it's not enough. Where can we get more information? Where can someone go and learn about this world of securities tokens?
I think there's a handful
of
people.
This guy, that's what I do.
Yeah, I mean, listen, there's a handful of people out there that are trying to build security token or digital asset specific websites. Hopefully we get some more time on CNBC, we can cover it. But I think the people with the most experience on this are the people that have done it in a repeatable fashion, which is platforms such as ours.
Because of this democratization of this technology, you can actually go and play with this tech yourself. So it's not just like reading about it. You can come, for instance, on our platform and create a security token in minutes. So you can actually go in, you don't need any technical background, you don't need to know how to code. A lot of the sentiment, a lot of the excitement has shifted towards the kind of compliant security token offering space. And I would encourage a lot of people interested in crypto to start here. This is where the next kind of wave of growth we expect is going to happen.
Well, as I said when we started this, there is a bull market happening. It's just not happening where we're used to it happening. It's happening in securities tokens. And if I can give you guys one takeaway here from Mexico, is that securities tokens took center stage. So we're here on the coast of Mexico, and as I said before, we're attending an unconference. Any television footage here at the unconference is strictly prohibited. But I caught up with some of the attendees to find out what they thought were the biggest themes of the conference. So Simon, we've been here for 3 days here at this unconference. What are the big takeaways for you?
The big takeaway for me is the quality of people that are attracted in a bear market. These are people really building stuff. There's new industries coming from this, and it's really got rid of a lot of the noise and the people that weren't meant to be here.
Okay, now that the noise is gone, what did you hear at the conference that made you think these are the big themes for 2019?
Well, I think the obvious one is security tokens. Everyone's excited about that. There's lots of people making announcements and developments in that space. We also had a hacked exchange, which just shows what can happen, how unprofessional industry still is in certain elements. And also a lot of people here from the institutional side, and they're looking to launch products in our space as well.
Okay, let's talk about the hacked exchange first. So you've got an exchange where the owner kept the private keys. What does that mean for the industry? I mean, that seems almost negligent.
It's nothing short of negligent. So we're seeing that there's exchanges that are managing millions of dollars worth of people's clients' money, and they're not even putting in basic contingency planning. Now, I'm not saying that's easy, because it's a very tricky thing, learning how to manage other people's money in the crypto space.
But that's basic. This is a multi-sig wallet. All you need is to have 2 other signatories and you're good to go.
Absolutely, and we're going to discover whether it was just simply somebody scamming money out of the customers, or whether it is just negligence.
Okay, now let's talk about the institutional investors coming into our space. At this conference, we had people from Fidelity, we had people from all the other big institutions. What do you think they think when they look at this industry? Where are they going to play?
So I think what I discovered is that we've kind of been through a cycle, and originally the institutions were all about blockchain and not Bitcoin, and then they were trying to build their own things. And now what we're seeing is that building infrastructure specifically for Bitcoin, and they're seeing everything else as too risky to be involved with. So they're looking at laying the foundation of custodial solutions, and the hack is just an example of why the institutions are going to want to come into this and have more professional solutions for holding other people's assets.
So they're coming in to professionalize our industry. So that's probably a good thing.
It can be a good thing, but at the same time, I also like the other side of the industry, which is where Bitcoin was designed for you to own your own money, spend your own money, and not use custodial solutions. But people want to onboard into a professional institution, and then eventually, hopefully, they learn how to store their own assets and get the true benefits of crypto.
Let's take another contrarian view. Okay, last topic before we let you go, securities tokens.
Yeah.
I think most the sessions here were around securities tokens. All the rooms were full when people spoke about securities tokens. Where's that going in 2019?
So we're seeing launch after launch. We saw T0 here talking about their exchange and their token. We launched a couple of products here. We've had our first security token wallet approved by Apple today, the BF wallet. And BnkToTheFuture, we started launching into beta trading for some of the largest companies like Bitfinex in our space.
So we can buy Bitfinex equity?
Yeah, so qualifying investors on our platform can buy Bitfinex equity, and we're looking at gradually iterating into the security token market through our wallet.
So would you say that at BnkToTheFuture you've pivoted and now you're all in on securities tokens, or are you still in this utility token play?
We never really were in utility. We built our foundation in equity. We've got equity in Bitstamp, in Bitfinex, in Bitfarm, and over 100 of the largest companies in the industry. And then in 2017, we kind of got disrupted by tokens. So we had to adjust into allowing people to buy tokens in compliance with securities laws. And now we're doing everything in our centralized way. We're launching our secondary market, but at the same time, we're iterating into the securities token, giving people the choice to hold it as a token or in a centralized way as the market evolves.
So the mood outside seems to be a bit bearish, but I think the takeout here is that there's a lot happening. There's a lot of building taking place, and that we're heading into probably the next cycle of crypto.
Absolutely. I mean, this has been one of the longest bear markets, and it might be the longest one we have. But the longer the bear market, the more building and the more ready it is for scale in the next bull.
So that's our coverage here from the Unconference in Mexico. We couldn't take our cameras right into the conference hall, but inside the conference hall, people are building. And the big talk is all around securities tokens. Until next week, I'll be on Twitter at CryptoManRun. And if you are still trading, trade well, my friends.
Crypto Trader is proudly brought to you by eToro. Discover a simpler way to trade and invest in cryptocurrencies and more.